Hello everyone, it's Kim Hong here. Happy Friday, by the way. Today I'll be sharing a trade idea with you guys just some 5 hours before the US non-farm payroll data releases. Okay, now with that, let's jump in to the fundamentals. Okay, so this pair is on dollar francs. Okay, dollar Swiss francs. Market awaits November's jobs report. All right, so the non-farm payroll data, okay, US jobs report will be released today at 21:30 GMT +8. Okay, so we are expecting, the general consensus, okay, the forecast is that 553,000 jobs, all right, will be added, okay, as opposed to the previous release of 531. Sorry, not as opposed. I mean, the forecast for November is 533,000 jobs. And then the actual figure for October was 531,000. Okay, so there's actually an expectation that the number of jobs increase, number of jobs being added for the month of November is actually higher than the previous month, which is October. Okay, so with that, it's actually a good forecast, right? It will be better if it actually turns out to be at least 553,000 jobs. Okay, anything higher than that, it means that the jobs market, the US jobs market, is actually on track. Okay, moving very, very closer and closer towards the Federal Reserve's maximum employment targets. All right. So as for unemployment rate, okay, is actually expected to inch lower, okay, from the previous 4.6% to 4.5%. Now, overall, I would say that this forecast is pretty positive. Okay, it's not like extremely it's not like we are having some extreme figures, like, for example, previous data release was 531,000 jobs, and then now we are looking at some 800 or 900,000 jobs, or even a million. Okay, and the previous unemployment rate was 4.6. We are not expecting something like a 4 this time round. Okay, but nonetheless, this is still overall a positive forecast. So if we were to see something at least as good as what we have for forecast, then we may actually be seeing a brief strengthening in the US dollar. Now, pay attention to what I've just said, a brief strengthening. Why is it a brief strengthening? Okay, why is it possible that the strengthening will be brief? Because, unfortunately, okay, with the whole discovery of the Omicron variant, it's a new COVID variant, okay, last Thursday, or maybe slightly earlier than that, okay, the market has taken a strong hit, okay, and this whole COVID uncertainty began to rise further. We now have a renewed fear for COVID, okay. So with this whole uncertainty going on, yes, we may be seeing US dollar strengthen, with a positive or even more positive than what we have here as expected, okay, report, strengthening based on this positive report. It's going to be brief, okay, because of the uncertainty caused by Omicron variants. All right, so think of it this way. All right, if let's say supposedly, all right, this is just a hypothetical situation, okay, if let's say the Omicron variant were to unfortunately create another round of global lockdown, okay, COVID lockdown across the world, across the globe, then it is expected that the number of people, or rather should I say, it is expected that jobs market will be impacted, okay, negatively. All right, I mean, no matter how advanced the vaccinations are and things like that, how strict the restrictions were to be put in place, okay, to curb this new variant, there will still be people who choose to just play safe, okay, and not go to work or take a sabbatical or furlough, what the UK calls it, and just stay at home for the time being. And that will directly lead to a decline in jobs figures, right? That will directly lead to a decline in employment. So we are looking at November's figure, okay, tonight or today, later at 2130. However, the Omicron variance is actually impacting a future figure, a future report. It can be for December, Okay, it can be for January, it can be for early 2022, first quarter of 2022. It all depends on how, Omicron unfolds itself, okay, or how bad it is. The medical experts, okay, would inform the world on. All right, so it can be, right now they actually say that it may actually be more contagious than Delta. Okay, so right now, what we want to know is whether or not it is more deadlier than the Delta variant and things like that. Okay, now if it's a variant that is not of too much concern, then unlikely we're going to see a lockdown, right? Like what President Joe Biden has mentioned recently. Well, he actually, I would say, he's sort of like speculated based on whatever data we have right now. Okay, and actually announced that it is unlikely that the US will go back into another round of lockdown. Okay. UK Prime Minister Boris Johnson as well. Okay, he mentioned something like, we are not going back to another round of lockdown. Okay, so we'll see how it goes. Okay, in terms of this whole Omicron variant issue. Okay, which is why, hence, even if we were to see a good report, the strengthening of US dollar may actually be brief. Okay, may not be sustainable. Okay, nonetheless, it's still important. Okay, because remember, maximum employment is one of the two main criteria to be met in order for the Federal Reserve to increase interest rates, probably next year. Okay, it's a good news after all, right? Okay, so yeah, with that, I will just show you guys the chart. And you guys can see over here that the purple region, okay, as usual, I like to mark this purple region as a consolidation phase, okay? So I think it was since this midweek. So you see, this is actually on a H4 time frame, okay? So somewhere around, let me just put a vertical line, somewhere around here, okay, you see a strong decline in dollar francs. This was last Friday, okay, when the Omicron variant was announced, and, it's sort of like created this whole strong sell-off, right, in risky assets and things like that. Now, although US dollar is considered a safe haven, over at dollar francs is actually the battle of safe havens to see who is safer than who. Okay, so many times, okay, francs is pretty much the more, I would say, safer option as compared to the US dollar. Okay, hence we actually see a weakening in the US dollar against the Swiss francs. All right, and then come this week, you see this weakening over here. That's probably when the Moderna CEO actually came out and say something like, the current vaccination, okay, may be not so effective against Omicron as it is against the Delta variant, okay, which led to another round of sell-off, okay. But then, there's this, I think it's November 30th, okay, 2200, well, I would say probably like 0800 GMT plus 8. Okay, we see the strong bullish candle on dollar francs. Okay, that's because Jerome Powell was actually testifying before the Congress. Okay, before day one of the testimony was actually before the Senate. All right, and he actually said several, I would say, very hawkish stuff. Like during December's meeting, they will consider this increasing of the pace of QE tapering, okay, and he actually even retired the term transitory for describing inflation, okay, and moving forward, the central bank, Federal Reserve, will actually try to communicate more clearly in terms of inflation, like how is it at the moment, and not just, just to use the word transitory, as they have been doing for the past 11 months to describe inflation, okay, so that's actually a very, very hawkish tone sent out by Jerome Powell, hence the bullish candle here. But you can see right after that, there's once again a strong sell down, okay, sell off on the dollar francs, likely due to the ongoing uncertainty caused by the Omicron variant. And then after which we see this, 55 pips, this range over here, some 55 pips, okay, and then we are here today, okay, just 5 hours before the US non-farm payroll data release. Okay, so this trade idea is simple. With consolidation, okay, we can actually expect price to break out of the consolidation eventually. Okay, hopefully not too long. All right, either upwards or downwards. Okay, if it's upwards, okay, let's put it this way. If let's say the non-farm payroll data release were to be good or would to be as expected, we may be seeing a brief strengthening, which is why, okay, I placed my buy stop order, okay, in case where dollar strengthen, okay, higher, way higher than this, I think it's some 20 pips. Yeah, close to 20 pips higher above this consolidation zone, okay? This is because I'm trying to avoid a false breakout, okay, a false breakout above the consolidation zone, which is why I put like some 20 pips above, just to be careful, just to be conservative. If let's say the strengthening happens to be, sustainable, okay, sustainable and due to a better than expected set of US non-farm payroll data, okay, then yes, it will trigger, and then we can actually, then the stop loss would be somewhere below this region, okay, which is maybe like around 80 pips, okay, and then our take profit will be around, okay, if you guys, I'll just put a line here. If you guys see over here, all right, this is actually kind of like a resistance level, okay? You see that this part over here, resistance zone, this part over here, right? So if we were to enter our trade, okay, or if the buy stop order were to get triggered, we can actually look for another 80 pips of profit, okay? So it's like some 80 to 80 pips, 1:1 risk reward ratio, okay? Now, that is for the buy stop order. Now, in the scenario whereby the sell stop order would be triggered, actually, personally speaking, I would prefer the buy stop order to be triggered than the sell stop, because the sell stop order risk reward is not that good. All right, let me take a look at this. So the sell stop loss, okay, level will be somewhere around here, which is around 80 pips, 0.923 level, okay, which is around 80 pips. And then our take profit level, I will put it close to the end of here, okay, which is around 60 pips. So you can see that the risk reward, okay, I'm risking 80 pips for 60 pips. It's actually not too good of a risk reward, okay? But once again, you realize that 80 pips, 60 pips, for sell stop order, 80 pips for buy stop order is actually considered quite small as compared to my usual trade ideas of like 150, 200, 300 pips kind of take profit level, and 100 or 150 pips kind of a stop loss level, all right? So which means that this trade is likely going to be shorter in terms of the duration, okay, in terms of holding the trade, okay, it's likely going to be shorter than the other trade ideas that I have been firing out recently, okay. So yeah, because with this whole short-term strengthening, potential short-term strengthening of the US dollar, I don't really expect it to go all the way up to TP, to be honest with you guys, okay, unless we are seeing or hearing some positive news, okay, on the Omicron variants, okay, perhaps the new vaccine can be more effective, okay, against the Omicron variants than the previous vaccine is effective to the Delta variants, okay. So all these news actually pay attention. Now, let me just show you guys. I think there are some other news that upcoming news, I would say, all right, that may actually impact. Okay, so we actually have the US ISM services PMI data release, okay, just I think 1.5 hours after the US jobs report data release, okay, today. And then on the 10th, we are actually seeing the CPI month-on-month data. Now, remember that the CPI data is the inflation, okay, US inflation is the second of the two, is one of the two, okay, one of the two criteria, okay, for the US Federal Reserve to hike interest rates. Okay, remember they have this dual mandate objective, right? First is maximum employment, which is determined by jobs data. Okay, the second is the price stability, okay, which is determined by inflation. So, anytime when there's inflation data releases, like the CPI, or the Fed's preferred measure of inflation, which is the PCE, okay, personal consumption expenditure. Yeah. So, when there are inflation data being released, we will have to pay attention to it, okay, because it's one of the dual mandate. So, with these data coming up and with the ongoing uncertainty from Omicron, all right, yeah, if you ask me which direction will this trade idea move, personally, I'm not sure, okay, which is why we have a straddle strategy, which is why we actually try to take advantage of both the upside and downside of dollar francs, okay. So with that, if this trade idea gets triggered, either direction, okay, I will inform you guys again on our EcoFin platform, our Traders Club. All right. Then I'll be canceling the other trade order as well. Nonetheless, I will just inform you guys what to do. All right. Okay. So with that, you guys are trading the non-farm payroll. May the bulls and bears be with you guys. All the best. Hope you make some pips. I'll see you guys again next Monday. All right. Take care for now. Bye bye. Have a good weekend.